Some green arrows overseas this morning and a positive tone in U.S. futures as Germany's GDP came in better than expected. Jamie Dimon meets with shareholders today in efforts to relieve some pressure on J.P. Morgan, which could provide a bounce for the sector. The street is gearing up for Friday's Facebook IPO. I'm Brittany Umar, and the morning call starts right now.
Good morning, I'm Scott Rutherford, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the Morning Call Express. So German GDP coming in better than expected, Scott, helping to lift overseas markets and of course setting a positive tone for U.S. futures. Do you think the market holds up today?
Lately, if you have big down opens, it's been hard to short, and an up open has been hard to buy. And a little good news out of Europe is definitely welcome, because all we've been seeing is bad news. And at this point, it's very tricky because we're about almost 6% off the highs, and traders don't think that's enough for a sustainable move. But we're oversold enough for a bounce, and some of these stocks have been so beaten down, if you try and buy them, they're not actually having some power to the upside. So it's been a tricky spot. So with this up open, I think traders are going to give it like 30 to 60 minutes to see if there's any commitment to it.
So what are the key levels that you're looking at in the S&P going forward today?
Well, let's take a look at the chart and see where we came from. So if you look up here, there are always times to sell and times to buy. And if you remember right around here, right around this 1390, that was your time to sell. That was your time when we broke this upper level. That's when the right shoulder started to build and roll down. So from there, we've had a pretty nice move lower from 1390 all the way to yesterday's low of about 1336. So that's a nice move lower. So at that particular point, I would have thought it would have been pretty prudent to cover your shorts, but I don't know if many traders went long yet. So if you take a closer look here, you will see on a micro level, I do think that you could get some type of bounce to retest this 1350, 1351. I think this 1360 will be very, very big resistance. And then on the short side, if we fail today and we start taking out yesterday's low of 1336, this 1320 to 1322 is a major, major level. And then ultimately, the measured move of this head and shoulders pattern actually takes you all the way down to 1300. So I think we're at a spot where we might try and bounce, but I don't think it's exactly a bottom.
All right, well, the banks have, of course, remained a sore spot. Now we have the news today about Jamie Dimon meeting with shareholders, of course, raising then the question, could that possibly be enough to lift the banks?
I think at this spot, it's a better leg in if you have a longer term plan. I think Jamie Dimon's going to try and ease the tensions here. And if you look at the chart, there's also times to sell, times to buy. You go here on earnings day, which was right here. That was your first signal that we might get a bit of a corrective action. You never want to see a day like this on earnings. Once we broke this floor, that was your way out. So all the way down here, you know, at 35.79 into some major support at 34, which I think is actually tangible book. I'd say in this area, you're better off being a buyer versus a seller. And then today for the markets, if it can start getting above, just say 36.47 and continues to rally up, I do think it'll help the other banks, and also just keep your eye on the XLF.
And high beta tech has been mixed, but yesterday you were saying Apple is really reaching those crucial key levels. You said today's going to be an interesting day for that stock. What do you think about going into today with Apple?
Well, yesterday it started to break down. We made some good money short, you know, as it started to break 360. I mean, not 360, 560. But the question is now, with today's up open, do you see a divergence? If you take a look at the chart here, you'll see we're coming into very big support. This is the pivot low of 555 back from April 24th. We closed on our lows yesterday. I'm actually short a little bit overnight, but not what I had yesterday. If it starts to go negative and push through yesterday's low of 557 and then through 555, you'll probably see the market give up some of today's gains. And I think guys are going to use that 555 as a pivot.
And of course, as we get closer and closer to Friday, everybody's very excited about the Facebook IPO. Facebook-related stocks perked up a bit yesterday. Does a trade continue to be there today?
I think you have a little bit more room. You saw Zynga perk up. I think it has room to like 9 and change. LinkedIn's been acting very well. I think that's much more than just a Facebook alternative. I think that has a good future. Groupon I'd be careful with. It bounced yesterday. It's continuing today. If you bought yesterday and you took it overnight into earnings and took that risk, I would say sell some on the open. We have a lot of room between now and Friday. I think if you tune in at another particular point, I'm going to give you the actual art of trading Facebook, so you don't know if you could just jump in or not on that day.
All right, sounds good. We're going to talk about all of this and more in the long version, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.